Hey, what's up? Ryan here with Forever Profit. I'm actually very excited to start this video because this probably is going to be my best work as of date because this is how I currently do trade the market. The name of this video is going to be called Tying It All Together. Now, the reason why I'm calling it Tying It All Together is because it's going to involve everything that you previously watched, from support and resistance and learning how to do that basically doing trend lines, basically doing supply and demand with structure, okay, basically doing divergence with levels, obviously seeing a little bit of how to tie some of it together, but not the full bigger picture when you watch the FIP, GV, IML video. And the reason behind that was because it's a free video. I didn't want to put everything out there, but this video is called Tying It All Together, where I will, exclusively for Forever Profit. All right, so much love to y'all. Thank you for actually staying by us for over a year and continue to grow and develop as we are all on our way to building financial freedom inside of the marketplace and understanding what the forex market has to first and foremost offer. And always keep in mind, I always will say this, stay grateful for what the market has to give you. Don't get greedy. Trading is all about mindset. It's all from mindset because trading is 90% mental and 10% technical. If you don't have a strong mental, you're going to fail in this industry. I don't care how good your profits is as a trader. I don't care if you made $1 million yesterday or you make $1 million this week. If you do not have the mindset, you will lose all of that money, okay? Now, to begin with, as you guys can clearly see, guys, girls, ladies, gents, males, females, women, kids, that in this video, I have cleared out everything because I'm literally going to throw it on layer by layer and I'm going to break it down, and I'm also going to describe mobile trading. So this is going to be probably one of the most interesting parts about the whole entire video, is how to use this only for MetaTrader 4 tools, which I will actually go over, and you can actually use it on your phones. I prefer to use the iPhone, so sorry about Android users, you might fall a little short, okay? Now, as you can see, I only use one indicator where I will be giving out the template of this chart layout later on within the group, within the file section. I also upload it into the website. You start off with a candle, time, and spread. Now, that's the only thing you really need to see the spread and the candle time. That's it. Only indicator. Everything else will be MetaTrader 4. All right. So let's start off with the very first step. And that will be clicking this folder with the star-like image on it. You're going to click it, and you're going to scroll through. And then you're going to see something called oscillators. You can click that. All right. Now, due to looking through your oscillators, you're going to look for something that says relative strength index. You're going to double click it. These are my settings. I have a period set to 5. I'm using this for divergence only, and sometimes in most cases you can see overbought, oversold areas. Levels, I got a 30, a 70, and a 50, and then of course visualization. I have it set to this. All right, so we're going to click OK, and we're going to put that on the chart. Next step, you need to get out of the oscillator setup. You're going to go to trend. You're going to look for something that says average directional movement. You're going to click that, double click. Okay, and once you double click that, you're going to see these settings, line, the red, okay, the perimeters. You have it set to 14, nothing too special. Okay, you're going to have this black line to be a little thick. I'm thickening out my lines a little bit. And I do change up some settings as well as to the levels. I added a 30, a 40, a 50, a 60, a 70, a 20, and a 25. Basically refers to get full ADX education through Quillen section about how to use ADX. And of course, the visualization, all time frames. All right. So we're going to go ahead and click OK and throw that on your charts as well. Actually, I like to flip them around. I'm going to be honest with you. I'm very picky. Delete those two, put it back on. Throw ADX out there first. As you can see, what happens, RSI was on the bottom. I didn't want RSI on the bottom. My bad, RSI was on the top. I didn't want RSI on the top. I wanted ADX on the bottom. So the only thing you gotta do is just flip them around, and boom. All right, good to go. I like ADX on top and see my divergence right in my bottom of my eye because it's easier for me to see. Basically, it's up to y'all preference. So these are the only indicators that we're gonna have on these charts right now. For now, we're going to click Control Y And for people that don't know how to do that, you can also go to properties. Once again, here's the colors of my chart. I leave this up for a couple of seconds so you can see it. All right. Then we're going to go to common. Leave this up for a couple of seconds so you can see that too. If you want to manually do your own templates, change your own colors, you can. Feel free. And then you're going to click show period separators. And that's all. That's how you enable that. And each day represents 2 days. So let's say this would be Monday, half of Monday. Then the next day will be Tuesday. And then it'll be Tuesday, Wednesday, Thursday, Friday. Would you look at that? Market's getting ready to end. Then the next day when it opens up is going to be, of course, Sunday, then Monday, then Tuesday. You get the point. Now we have that all set up. The next step, the very next step is to have your Fibonacci. This tool, before I even go into full depth about explaining this, I'm going to double click it. Click your line. Go to Fibo properties. You're going to go to common. You can copy these settings as well if you want to. I'm going to give the template in the group. And then you're going to make sure that you have everything that you see here. I believe after this level, you're going to start adding these levels in. So 0.707 goes to the left, and then 70.7 goes to the right on the description. As you can see here, this the descriptions of the numbers. Okay, descriptions. 70.7, to type it in to get that number up, you need to put it in exactly as seen, 0.707. And as you can see, scrolling down, it would be the same thing, etc., etc. 0.786 to get 78.6, which is here. And 0.886 to get 88.6, which is here. And then 1.27, which gives you 127.0, which is there. Perimeters, click array, very important. And then visualization, of course, on all charts. Next step. So understand these levels. Okay? Very important that you understand 38.2. Right? 38.2. When market breaks and prints, the candle must, I use it on the H1 chart, and sometimes I look at the N30 to zoom in to see if it's cluttered. Right? So if candle was to break and print past 38.2, the next extension that the candles will go to will be 61.8. If it breaks and prints past 61.8, next extension will be 78.6. If it was to break and print past 78.6, next extension will be 88.6. If it was to break and print past 88.6, next extension will be 127. If it reverses off of 127, then it's going to go to 88.6. If it breaks and prints past 88.6, it goes to 78.6. That's to say that if it was to reverse off of this, it will go back to 88.6. And break past that, go back up to 127. Now let me drag it down. And the reason why I kind of went back up was because I want to actually explain one more, which is 161.8. If the candle was to break and print past 127, the next extension will be 161.8. Now, if it was to go down, the reverse, if it was to reverse off of this point, okay, the next extension will be 127. If it was to break and print past that, the next extension will be 88.6. If it was to break and print past that, next extension will be 78.6. If it was to do that as well and break and print past it, it would be 61.8. And then if it was to break and print past 61.8, the next extension would be it would be 38.2. And then the market will consolidate and you draw your Fibonacci over again. So I'm going to go over all of that now. I just want to explain that in the beginning of the video. So when I go over the video, you guys won't be confused. All right. So now it's very important. When you zoom in on your charts, you zoom in all the way. Click 3 points out. 1, 2, 3. And then since I'm going to go over this kind of live, we're going to start by grabbing the Fibonacci tool. Now, let's just say, for example, you see a weird condition in this market area. People are like, wait, this is a stop hunt. In reality, it really wasn't. Because if we go back to doing basic levels, how he was doing everything from before, you understand that this was a structured low for the midweek reversal. Okay, by putting a wick at the low, by putting a horizontal line at the low for support. And we also noticed that as the market was flat here, it definitely was a trend going up. Okay, so it was in divergence. That's a bullish divergence play. Market price is flat and momentum is moving up. That is a clear sign of divergence. Now, as well, why I use these two in conjunction, the rule of thumb is, let me actually fix this up real quick. The rule of thumb is as well, if RSI is doing something and this isn't, well, that might be a play that you might want to take initiative on when it's getting ready to confirm on ADX. Now, how to fix this up even better, I like doing orange and blue for mine. Click draw as background to take away these strikes. Boom. All right, and then you go to horizontal properties again, go to perimeters, and then make sure that this one is set on a 20. That's it. And then here's another one. I put this one blue. Click that, and then set this one to a 25. Boom. That's it. And I do that because this is very important to understand. Once again, refer to Quillen Black's video on how to use ADX. Very, very important, powerful tool to trend trade. All right, so going back to the foundation of what we saw there, as well as when we're looking at the market conditions, when you see ADX underneath the 20, that means that the market is obviously in a form of no trend. Now, if the market is in no trend, that clearly is saying, for example, there is no trade. But here, divergence was an entry point and there was a trade. And then what I love about this whole setup, since they were saying it was no trend, it confirms it. But here's the fun part. It finally, right here, where I brought my crosshair, right exactly here, the market confirmed ADX saying, yo, it's going to go bullish. And that's the power of it. Now, RSI is saying it's overbought. That's why I don't use RSI for overbought, oversold areas, only on certain conditions. Very important. Only on certain conditions. I don't use it as a tool to look for overbought, oversold areas. RSI 5 for me is just a divergence reader. I like looking at it for only one thing, divergence. Everything else is like irrelevant. So on mobile, this definitely plays a role. Definitely use it within the day breakers, because if you're not using day breakers, you're missing on a lot of money, because I'm about to explain how to use day breakers accurately with Fibonacci, and then you're about to be mind blown. All right, so ADX, once again, there was no trade right here. Lots of divergence. We knew that the market was going to go up. That was confirming it. That's one entry. One confirmation, right? 2 confirmation, knowing that the market is flat, having heavy support. 3 confirmation, ADX is confirming the bullish trends, and the black line was obviously above it, meaning that the market is trending. The green that's above the 20 means that the market is about to go bullish. And when it's officially over the 25, that is now confirming it again. So that's within 2 confirmations. 3 confirmations with the ADX actually. Okay. Bullish, that's check 1. Trending with black line, check 2. Above the 20, check 3. Above the 25, check 4. 4 confirmations. Divergence, that's check 5. Market is flat. The personal price is flat. Let's check 6. And then Fibonacci, let me throw that in there right now. You can see how I do it. I grab it from if it's trending up, I grab it from the low to the high. That's it. From the low to the high. And as you see, it falls in line, gives me what the next day is. I don't know what's going to happen here. I only knew how the day ended right here. So I know to predict what's going to happen here by dragging it from the low to the high. And I clearly see divergence. So I want to get a nice clean entry. How can I do it? Well, of course, you can figure it out through Fibonacci. And one of the best ways to figure it out through Fibonacci is by looking at this tool. Okay, so let me zoom over. Bring it out to about right here. I want to get a nice clean reading for you. All right, boom. We have now an area, as you can clearly see, of demand that we can draw out to the future. You can do this all on mobile. And as you can also see, not only was it in an area of demand and it taps, it was off a nice Fibonacci line that I was explaining from earlier. Now, on the computer, to get a better reading, I like doing this on mobile because it comes out a lot cleaner. And I'll show that later on when I explain how to mobile trade. On 78.6, the market failed to break that, and it reversed off of 78.6 on a lower time frame, and the market closed above the 61.8, so the next extension would have been 38.2. And as you can see, the market did go up, and it confirms even better. And that's what I love about this tool. It confirms with the whole entire divergence play. ADX confirms it as well right here. But the most important part was that it closed above the 61.8, and this was all entry because it closed above the 61.8 part, and the next extension would have been 38.2. Right, that would have been about 20 pips, and then continued up on the uptrend. You could have called about 55 pips, 56 pips, or something like that. Now, the market is in an uptrend. That brings back to zooming back out on your charts, and obviously using the conjunction of counting levels. This is all I do on mobile. This is all I do to day trade, intraday trade, swing trade. I don't scalp. I hate it. And then boom. All right. So this is level 3. Now that you go back to the divergence and obviously the levels video, you will see how I count out my levels. Market did the double bottom. Some people will call this a head and shoulders. Some people will call this the teacup. And in one of my videos, I only said it was a head and shoulders, inverted head and shoulders pattern. In reality, it was more than just that. Some people will say it is, but hey, it's also a teacup. When the market does a cup-like figure, okay, here's the line I can also draw for it. You can see how it's like a little pit, and this is the handle, and the market went up. Level 2 push, and that was level 3. That was the entry. Or entry could also have been down here for the teacup pattern, for the people that like trading just the chart patterns. Me personally, just using Fibonacci, I already knew what the time was, and knowing the average divergence, I already know what the time was. So there's a lot of bullish confirmations for the market to go up. Now, that the market did go up, we can now predict how do we get the market condition over here? Well, that's a great question. So what we do is we figure out by deleting this Fibonacci tool. That's 1. And 2, to figure out how to draw it over here to get the prediction for over here, right? So you can zoom, put this up here, so I can show you the numbers accurately. And the reason why I use this one over the other pit counter that you saw previous in other videos, when you draw Fibonacci, for some weird reason, it clouds the whole entire screen. It clutters it, and I don't like looking at it like that. This is so flat that you can still see the numbers perfectly fine without any disturbance on your charts. So once again, you grab it from the low. This wick low, find the lowest point, the lowest ultimate wick. Bullseye on that crosshair that's sniping it. And you're going to drag it up. Boom. And I go at the top. Now you're looking at the market and it's like, whoa, wow, looks like you double bottom as well. Whoa, wait, how? Well, I just wanted to predict what was going to happen over here, right? So, also, you can even get a zone and drag it out. Once again, go to my other video to figure out how to draw zones. Wick to tip of body. Drag it out to the future. Nice double bottom. As you can see, 61.8. Let me actually zoom in, move over. Perfect. Let me zoom in. Take lots of notes, write down lots of things. I'm going to go over this in full depth as possible. And then I'm going to go over mobile trading. I'm going to make this video long, but at the same time, it's going to be straight to the point. I want to do a lot of examples. This is mind-blowing information. 61.8, strong area of support. Nice zone. It acted as demand. See, the market shot up. And then it pulled back in and consolidated within the zone. So once it broke the supply zone, supply zone now becomes demand. Market consolidated, did a double bottom inside of that zone for demand. Price was demanding to go up. And as you can also see, 61.8 acted as an area of support. Boom. Next extension was what? 38.2. It broke 38.2 and the market continued going up and continuing out the pattern of the teacup. So now let's zoom out just a little bit. And as you can also see, not only was that the divergence play done, you will see right here on ADX that the market was showing no true trend right here. But as you can also see, the green and black line was eventually carrying up. The more space that is between the red, the better. The fact that it was carrying up, it identified that the market was going bullish. Okay? And then once this pulled back, it says, hey, the market is getting out of bullish trend. But if you was a swing trader, you would have caught this and let it ride. Your stop losses, very important. If you're trying to predict the day and your order is down here, you're not going to put a stop loss above 61.8. That would have been dumb because the market usually will pull back to 61.8. What you could do is leave your stop loss at the low, or you can leave it at break even. Buy the 78.6. If it gets hit, it gets hit, whatever. I personally, when I get a loss, I get out the market for the whole day, and I do not trade again to the next day. Very important. Limit your losses. I lose one trade for the day, I am done for the day. I will trade back tomorrow or another day. Very, very simple. I trade only Tuesdays, Wednesdays, and Thursdays. When I am trading, my inbox is flooded, and I will not answer nothing. So I want you to watch this video over and over. If you have any questions, it's very, very broken down. Alright, so this is level 2. Now we're trying to figure out how to get the level 3 push, right? Only thing we're going to do is, we understand it's level 3. So we're not looking for no sells yet. We're looking for that nice double top before we even get into a sell play. Only thing you're going to do is the same thing. Grab Fibonacci, snipe it from the low, drag it to the high. What makes this so beautiful is the fact that it pulls back. And as you can see, let me actually go back over. Right here, the 50. Now, I want people to realize what the 50 really is. Let me go to M30 chart. The 50 on Fibonacci is really just the middle part of the M or the W or the double top or the double bottom. In this case, it was an ugly double bottom. Okay? I'm actually going to go find better examples so I can actually show the more clear accuracy of using the 50, because this one is actually a bad example, and I don't go to the F15, so I'm not even going to click it. But I know what time it was because this is a little piece of a W. Anyway, so it bounced off 38.2. As you can see, it broke it, and then eventually market went back, retested 38.2, and it kept shooting up. It never really broke 38.2 to go back inside of the fibs. So now that we have that new structure, and I will go back with the 50 because that wasn't really a good example as I thought it would have been. I want to actually show that because it's very powerful. Once again, grab it from the low, grab it to the high. Oh, here it is, perfect example. Alright, so 38.2, as you can see, didn't break it. Got the prediction for this day. Did not break 38.2, but what did we find here? It kind of did like a double top structure to the 38.2 with right here, boom, first, second, and then it broke 38.2, and then it extended all the way down to 61.8, broke 61.8, next extension would have been 78.6, brought 78.6, next extension 88.6. And as you can see, it kind of chilled at the 127 point. Alright, so now we need to figure out how to get this prediction. That's all we're doing is figuring out how to get market prediction. And the intraday breakers, the period separators, are important because if you're not using them, you're missing out on money. Tons of it. Because you wouldn't really understand how to draw it. You just see blank charts. But if you have enabled, and you're grabbing Fibonacci and using it within a day, you're using the proper precision to figure out the market. Now, here's the beautiful part about this. Get to the H4 chart. Drag that zone over. Okay. Zoom out a little bit. Drag it up. Let's drag it to the future, in this case. Alright, so on the H1 chart, before it even went up here, if you knew what time it was for a zone, you could have drew a small area right here. Okay, small little area. It's about like doing this on a phone over a computer. Alright, so you could have drew a small area, and then to the future, and then once it got up to here, you just want to fix it. But let's just say, for example, the market did go in this area at supply. Double tap the supply zone, right? Boom. What I love about this fact that I want to predict what the hell is going to happen here. This, if you see, is funky. Alright? But the funny thing about it, while it was being funky, there was some divergence right here as well. You see that the market is clearly flat right here. And as well as when the market was flat, it was going up right here. So we see divergence. We see ADX confirming it. It's going up into a bullish trend. That's why I love using them united. It's one hell of a beast tool. You understand that this is level 1. And the market went back to retest the high. So we have level 1, level 2, level 3. It never really kind of broke the high. So it's still flat. And it retested the high for a triple top. 1, 2, and 3 triple top. Then, of course, it's a guaranteed drop now. Unless it went back up and broke it. Would have been like the 4th hit to the high. But I already had doubted it. Anyway, so 1, 2, and 3 triple top formation. The market had a divergence play for it to go up to do that triple top. So that told you by itself to get out of your trades if you were short. Get back in later on. That's why I enter on the setup and I exit off of the setup, and I am forever grateful for what the market has to give. I do not chase the money. I do not chase the pips. A person holding on to this trade is blinded by that, and they're chasing the money or the pips, and they're not realizing that this is telling you to exit, and it's about to be strong push up because the way how it's consolidating. If it's showing bullish divergence, that is a high indication, and of course, there's probably news that got put into play there, and I believe this red candle was ECB. Now, if we go back and look at it carefully, you'll see the facts that I dragged it from here to here. I did not know what was going to happen here yet. If you look at it carefully, 88.6, it hit it. Let me go to the M30 chart because those candles are huge. And by the way, it did a double bottom right here as well. As you can see the divergence. You can't make this stuff up. That the market did go up. It hit 88.6. Went inside that supply zone. Okay. Actually now draw it up. So you actually line it up to the top of that wick. I went inside that supply zone over 88.6 and reverse. Boom. 78.6 was broken. So the next time when the news came out, I believe it was at the 8:30 news. Right here, you see it, 16:30. That would have been 9:30 a.m. Eastern time. This is at 8. This is my bad. This is at 9. This is at 9:30. So that's ECB. Market shoots all the way down. And as you can see, it broke to 61.8 and then it broke to 38.2. Then the market clearly just went flat after that. But knowing that it's in a downtrend, if you see that big push happening after that triple top, there's no reason somebody should buy. There is legit no reason. And even if you do horizontal lines, you notice that it was at an area of strong resistance. At an area of strong resistance. Let's see here. There's a wick. Here's body, wick, failed. Did not really want to go up. And you could draw a small little zone up here as well if you wanted to. And you can see how it went in, went back out, went in, went back out, broke it, came out, broke it, went back in, went back out. And you can see the nice double top formation here and this nice M structure, and the market did fall. So that basically concludes how to use Fibonacci with accuracy. Now, what I want to ultimately do, because I don't want to make this video too long, I want to make it straight to the point, simple. And obviously, as you can see, I'm doing it on Euro USD because it's my favorite chart. I actually want to go to gold, and I'm going to draw a little bit on gold so you can see how it's also accurate on any pair, such as the commodity itself. Right here, market did do a double top. Didn't have to go all the way back into the fibs to prove anything. And if you even get your Fibonacci line again, once again, you can draw it from this high to the low. Okay. Market kind of got close to that 38.2. It failed. Didn't even get that high. And the market just collapsed anyways. And it's now underneath here. And then now we're on Friday. And that's only level 1 drop. So rearrange the numbers. Level 1. Level 2. And also, keep in mind that not only did that happen, you could also have, since this did fall and it retested a high, sometimes you just have to be a person that just have to drop ego and adjust it. That could be also possibly level 1. and this is also could be possible level 2, and this could be level 3, and it's structuring out to do a level 4 drop, or it could also be structuring out to just get ready to correct itself and go back up. Notice I'm looking for overbought, oversold areas. Now, this is powerful. If I go back and explain this real quick before I even move on to you going on to golds and showing how to trade off of mobile setups. This is powerful only when you see it off of a nice PRZ zone, see 88.6. It failed to break that high. But right here, it told you that the market condition was overbought. Now, why would that be? That's the only time I would use it, is in Confluence. Okay? Confluence is life. The fact that it's showing me that it's in the supply zone, it is overbought. It came off of an 88.6 PRZ, as well as when you go to the M30 chart, you will notice that not only was it overbought here, and you can see how it was trending all the way over here, that when the market did reverse out of supply zone, everything was in a nice confluence structure in the market. 88.6, reversal. Overbought, reversal. Supply zone, reversal. Okay? ADX wasn't going to tell you what was up, but the fact that it was in that area of reversal, this was not a stop hunt, nor was it a freak act of it to go back down. Price is going to do what it has to do, and it failed. You cannot make this stuff up. I'm not even looking at news, and I know that this is major roles in the marketplace. So now let me clear this chart up. Actually, no. Yeah, let me not do that. Actually, let me just leave this on. I'm going to go do golds. I'm going to explain mobile charts. Okay, so only thing you're going to do is delete the pit counter. We're not using that. And we're going to leave RSI on it. And we're going to add ADX. Alright, so now that we have all that added, actually, let me fix that. Because when I explain this issue right here with golds, I'm about to be mind blown as well. It works on anything. So we add EX first. Then we add RSI. Alright. So now we have golds. Here's the fun factor about golds. Market from here to here is the same thing, just a different day. I want to predict what's going to happen here. I don't know what's going to happen here yet, but guess what does know? Fibonacci knows. As you can see right here, the market did a double bottom, and it did go up. It chilled, consolidated. Right here is saying, hey, we're overbought. But in reality, that's cool. It doesn't really matter. Once again, we're not using it for that. Get a trend line to figure out what could possibly happen in the marketplace. And then we're going to leave that there. Look how later on it plays a role. So how the market eventually gets. Okay? Can't really make this stuff up. Also, let me add on the candle time and spread, because that is an important factor, so you can see how much spread gold actually does have. Alright, so that's 80. Alright, the 80 stands for 8 pips. Drop the last number. Now, golds, if you also look at it, by the way, let's just say if I dragged it all up here and you swing it from the low, caught it to the high, you will see the number says 103 and a slash. The 103 don't really mean much. Where you see 4,255, that stands for 4,255 micros. If you want to read it in pips, you drop the last number, which is a 5, and then you will see 425, and that would be 425 pips. If you had one standard lot on this, it would have been $4,250. But and the more important part is looking at this and seeing how it all lines up with Fibonacci, okay? Just Fibonacci, you see how this market will play out, and obviously you could also use supply and demand. All right, so in this case, you could draw a little demand zone right here, and the market did go touch it. But right here, when the market did go above the 38.2, okay, right here, 38.2, it went up, and it failed to break it later on. See, look, boom, 38.2, and the market did that. So now you're trying to figure out how this day was going to play out. Besides, you already see 38.2 acting as an area of support. It was rejected, and obviously the market continued to go up, right? So all you're going to do is grab it from this low, right, and you're going to drag it to the side. We're going to zoom in. Let me delete the zone so you can see it better. Zoom in a little bit more. All right, perfect. All right, perfect. My bad. All right, so right here, I'm trying to see why did this happen. And as you can see, price for the next day, when it was moving around here on 23.6, it tried to break the 38.2 and failed. Market went right back up. Tried to break the 38.2 and failed. And eventually it did, and it went down to 61.8, and that failed. See, it broke 38.2, next extension would have been 61.8. It failed to do it, and the market went right back up. As you can see, these wicks, they're also cancel small time frames. On a higher time frame, it failed to break it on the 61.8 H1 chart. Is why I love looking at it. It gives you more confirmation. Wait until the candle prints. Do not enter the trade. Oh, it's breaking right here. It's breaking. Let me enter in the sell while the market is still moving and the candle didn't even fully close. And you enter the sell thinking that it broke the 61.8. It's going to go to 78.6. Next extension 88.6. No, it's not going to work like that. It works when the candle fully closes. Like, okay, don't be that type of person saying, no, I'm just gonna do it anyways. I used to be that person. Don't be that person. 61.8 right here. It tells you that the market did not break it. It went up, went down and hit the stop punts. But people that got it right, you just got stopped out because you would have probably put a stop loss right here or anywhere around here. That's fine. The stop loss, I usually will put it way underneath the Fibonacci line. So let's just say if I did have it drawn out and it didn't break 61.8 and I had to buy, I would not put it by 78.6 because if it broke 78.6, the next extension would have been 78.6. As you can see, it went down on wicks on a higher time frame, on a small time frame, it would have been a candle. So it reversed off of 78.6 and then it clearly went up and went to 38.2 because it broke to 61.8, then went to 38.2 and it kept going up. So my stop loss would have been around 88.6. The next destination of the 78.6 would have been 88.6. That's where I would have had my stop loss. That would be a safer area. So as you can see, the market did shoot up. And not only did it shoot up gradually, you could have even got Fibonacci tool. A lot of people were cashing out in like certain signal groups. And I was just like, The only thing you have to do is this. Drag it from that low to that high. You would have seen everything right before your eyes. And you would notice one of the biggest key components here was that when this dropped down to the 100, the market reversed and it broke 88.6. When it broke 88.6, the next extension was going to be 78.6. It broke 78.6, and as you can see, the market played around off of 78.6 and never went back and broke it. If it was to break 78.6, it would have just been failed, right? But in this case, it didn't reverse. So it broke 88.6. Next extension 78.6, pulls back, rests on support of the 78.6 area. Next extension after 70.6 would have been 61.8, and it broke 61.8. Crazy big candle. Breaks it, goes to 38.2, and it sits on top of the zero. So now you know that the market was just going up, and that confirms that midweek reversal or that weekly reversal. See level 1, level 2, level 3, and that's level 4. So let's also number that. And the rule of thumb is when the US dollar is weak, gold rises. When the US dollar is strong, gold drops. Level 2, level 3. The training that I am teaching y'all works flawlessly. Please use it on mobile. Please use it anywhere you want. MetaTrader 4 tools only. That's it. That's all it really is. It's kind of redundant at this point. So I'm going to go in mobile trading after I explain the rest of this goals procedure. Why it dropped, why it rose, why it did everything. As you can also see, ADX, everything plays its role. That's level 3, and obviously this is level 4. Level 3 would expect it to drop. But if you had your fibs drawn right, you realize that it wasn't supposed to even drop then. So look, let's go figure that out. That's why I love doing this, because it lets you know not to get greedy, and it lets you know what's up in the marketplace, okay? Very important. So now we enjoy from this low to this high. We now establish that the market was on level 3, so we're expecting to drop, right? Oh, snap, did a triple top. It hit once here, so we're expecting to drop. It fell, so look, it went off of 38.2, fell to break it. So that said, you know what? It's not ready yet. Let's get out of that sell. Market goes right back up. And I go, okay, fine, we got the triple top. Boom, right? We're good to go. Look at the triple top. Would have been, you would have felt happy because it's like, oh, it's a triple top. And reality is, it didn't really work out. And that's fine. And if you didn't want to draw the zone, that's also great. You could just do one little horizontal line right here on the top of that body. You would have figured it out. 1, 2, 3. 3 hits, drop, right? Oh, looks like an M. Double top. Falls. As you can see, when it broke the 38.2 and it failed to break this, that lets you know it's time to redraw your fibs over anyways, because it's a new day. You realize that that third drop was not dropping. There's a little something fishy there. And the market is right here. No, that don't make sense. So what you got to do is, like, you know what? Maybe it's not ready to sell anyways. So the only thing you got to do is drag your Fibonacci tool, once again, from here to figure out what the hell is going on. Now they have a new tool laid out. You're waiting for the market to figure out what the hell is going to happen. As you can see, it pulls up to the 50. Zoom in. And it pulls back. Remember I said the 50 is used as the middle part of the M or the W? Well, I'm about to show you that. Right here is support. Okay? Support. As you can see, it went up. 38.2 kind of fell. So it went up, did the middle part of the W or the double bottom. See right here on the 50. Perfect example. Went back down. And eventually it did break the 38.2. Once it broke 38.2, next extension would have been the 61.8. That's why I use the M30 if it's clear. If on the M15 chart, I'm pretty sure you would have seen it a lot more cleaner. I do not like using this chart, but you could definitely see what I'm talking about on this chart. Okay? The market did go up. Nice double bottom, whatever you want to call it. Goes up, breaks the 38.2. Next extension 61.8 breaks that. 78.6 breaks that. 88.6 breaks that. And like I mentioned, look, it consolidated on top of the 88.6 as support. And as well, if you drag the zone out even more, you'll see how that does still play a role. You know, always drag it out to the future. When a new day arises, you can drag it out to the end of the day, the period separator. So example, end of this period separator. Lets you know that it's going to continue out for the day. Next day, drag it to the next period separator. Self-redundant, right? So 88.6, sat on it like support. Market shot up, 127, broke 127. Next extension would have been 161.8. Hit 161.8, reversed off of it. Next extension 127. Broke 127, next extension would have been 88.6. Broke 88.6, next extension 78.6. Broke 78.6, next extension 61.8. Broke 61.8, next extension 38.2. And as you see, the market did chill right here. Failed to break the 61.8, acted as resistance, and the market went back down around the 38.2 area. So I want to figure out how the hell the market's going to happen there now, right? Delete this. Drag it from this low. As you see, it started today. So this is the low. There was no lower lows, except for right here. Drag it up to the top. Now we're going to predict what happens over here. As you can clearly see, 61.8 was heavily rejected, and the market failed. Right? 78.6 failed to break that. So the market extension would have been 88.6. So look, it broke 88.6. That was it. Next extension 127. Next extension 161.8, and it pulled back. And that's off of just doing Fibonacci. just looking at Fibonacci and using this intraday levels. I didn't really even glance at ADX or anything really crazy. I just looked at price points. Oh, but Ryan, how do we enter these trades? Well, if it doesn't break the zone, the PRZ zone, okay, the only thing you're going to do is basically enter the trade. If it breaks it, right here, if it breaks it, but even though you know that it's on a fourth rise, so you're not going to be taking no buys, you're going to be taking sales to begin with. So if it was to break it, then that would have been an indication, hey, price probably will be going back up. But it's confirmed that it's in a downtrend anyways. So the only thing you're going to be doing, by the way, this is an ugly head and shoulder, head, and here's the shoulder. That explains why it does drop. But the point is kind of see the curve too. But the point is that if it was to reverse off of 78.6, all this is rejection, your entry point was around here anyways. It failed to break the 61.8. It pulled back, making lower lows. Failed to break 78.6. Does an ugly M right here anyways. And then it consolidated. And then it finally did break out. As you can see, you could call this also double top. As you can see, also when it did that, it kind of also broke the support that I previously drew here, which also confirmed it going back into downtrend because it acted as resistance. And 88.6 acted as resistance. ADX confirmed that it was going into a bearish trend because, as you can see, it confirmed it over the 20 and 25. I'm not going to color these in, but you can see it. Okay, boom, it's starting to trend. This is saying that, yo, it's oversold, but that doesn't really matter. Like I said, I only use this for divergence or confluence when it's off of the PRZ areas. As you can see right here is also divergence when the market was shooting up. All the way up here. Okay. Market was flat right here. So that's divergence. And market did drop. So your confirmation of your sells are all right here. Broke support. Failed to break past 88.6. Definitely confirming the downtrend. Next extension will be on 127. ADX is confirming it's a downtrend. And then we could count the pips out. You got the trade. You could have caught about 184 pips. I can't make this stuff up. So what we're going to do is basically now we're going to go over how to get this on your phone. So MetaTrader 4 iPhone layout. This is how mine look on my phone. Okay. Bring that down. This is exactly how my stuff look on my phone. Here's my supply zone. My bad. This is my demand zone. I have Bollinger Bands on my phone. I have 8 EMA, which is blue on my phone. The red SMA is on my phone. And then I have the black line right here, which is my 50 EMA. I have it on my phone. You don't really have to use the moving averages. I use it to my personal preference. This is my phone layout. Everything I displayed by itself was self-explanatory, how it does work without even having that type of stuff. I just personally have it on my phone because I just like using them as confirmation tools. Basically, 8 EMA, when it crosses over the red SMA, it's confirming it's an uptrend. When it's crossing back over downtrend, it's a downtrend. When it crosses back over, it says it's an uptrend. As you can see, this is on GBP JPY, same scenario. Price, I dragged it from this high to this low. When price broke out to the 38.2, the next extension would have been 61.8. If it broke 61.8, which it did come back down a little bit, acted as support, the next extension anyways would have been 70.6, and then 88.6, and then 127. It pulled back, and it fell to break 88.6, and it acted as support, and then it went up to 127, then it extended to 161.8, and then for some, you rarely would see this, it went all the way up to 261.8. So there was a crap ton of pips made today in GBP JPY. As you can see, it was saying it was oversold forever. Didn't really matter. ADX confirmed it. As you can see, it was above the 20 and 25. I colored it gray and blue on my phone. And then as you can see, I don't have all the other extra levels on my phone as well. The green line confirmed it going into a bullish trend. And above the 25 confirms a bullish trend, while the black line did move above it as well. So now we're going to figure out how to get this set up. Now, if you're on an iPhone, you can do this very simply. You're going to click this right here, this box. Oops. Did not want to do that. All right. So you're going to click this box right here. Whatever. And then you're gonna go to objects. You're gonna click add objects. This is everything that I have on my phone. You can see these tools. ADX lines, rectangles are my supply and demand zones that you saw in there, and obviously retracement tool. So you're gonna click add objects. Okay, how to get fibs? Click add objects. And once you click add object, you're gonna scroll down, look for everything that I put there. Fibonacci retracement. Boom. Click that. You're going to, very important, you're going to drag it on your chart. You're gonna hold down the line. Okay. You'll hold down one of the lines. Pull up your properties, and once the properties pull up, you're going to have these same exact settings. I'm not going to really explain it. Click very right. That's very important. Turn that on. Make sure you have all these same settings. Then what you're going to do is you're going to click levels. You're going to click levels. Okay. This is fib settings. Click levels. And then you're going to go to fib levels. Fib levels, only thing you're going to do is add all the levels that you see right here. All these already are defaulted. You're going to add every last level here. 70.7, 0.707. Now, on a computer, this is your the numbers that you need for Fibonacci. This is your description. Okay? Now, if you notice, on the mobile and computer, they're on opposite sides. So on the mobile, your description is not on the right side. It's on your left. So you're inputting your description on your left. That's how you pull up the numbers. On the right side is the actual numbers that you need to have, the mathematical numbers that you need to have to enable it, and then describe it on your left. On the mobile, once again, you're going to follow it. As you see here, on the computer, everything's the opposite. So 0.707 wouldn't go on the right side on the computer, it would go on the left. 0.786 won't go on the right side on the computer, it would go on the left, etc., etc. Now that that's over with, we're going to go back here. You're going to see this tab. You're going to click this little F. Okay. And then you're going to go add to main window, and you're going to add everything that you see here. Click main window, add fractals. Click main window, add moving average. Click main window, moving average. Click main window, Bollinger Bands. Moving average. 3 moving averages. Fractals. I'm going to go explain fractals in a second. This is the 8 EMA blue. So once you add 8 EMA blue, boom. You click main window again. Go down to moving average, and then click 21 SMA red. Once that's submitted, click main window again. Add a Bollinger Band. Change the 20 into a 21. Click out of that. Once again, change the 20 to a 21 because I use a 21 SMA. The middle part of the Bollinger Band is basically a simple moving average. So basically the 21 replaces it. So the only thing you have to do is just change the 20 to 21. Also, you're going to have 2 lines. And it's going to kind of confuse you. So just change it. There's only one number difference. Change it to 21 so they are actually lined up together so it looks like this. This red line will be the 20 on Bollinger Bands. But I changed the red line to 21 on the Bollinger Band so it lines up with, you don't really see it. It's like underneath it and it lines up. So the middle will act as the middle part of the Bollinger Band. The top, the rule of thumb is when price is outside of the bands, it's going to go back in. Okay? And then the middle part is just, then you know it's a base. And that's what the 50s also could be used for on RSI. Let you know that the market could have a possible structure support or resistance. See right here, example. How it bounced off with the 50, acted as resistance. Right here on the 50 acted as support. So then you know it's about to bounce off of it. And it did break it. And as you can see, the 21 was the middle part, what I'm talking about. So I broke that. Now, fractals, before I get back into explaining the rest of those settings, rule of thumb on fractals, when the arrow is pointing up, as you can see, price is going to shoot down. When the arrow is pointing down, price will shoot up. I just like using fractals as confirmation tools. Let's say, for example, if I knew this was a supply zone, I saw fractals here, I would add identification that the price will have been shooting up, as well as you can see it oversold. And obviously you can see that his ADX was going up. The fractal would have told me, hey, look, this possibly is going to go up. But my confirmation would have been more when it hit the 38.2. When it broke 38.2, that was letting me know, hey, it's time to actually take that buy. ADX was confirming it anyways. And that confirmed it going on to the uptrend. And it was doing levels level 1, level 2. That would have been level 3 anyways. So back to looking at this. Just adding moving averages. This would have been a 50 EMA black. That would have been a black line that you would have saw on the other chart. ADX, you're going to go to main window. Go down to indicators. You're gonna add the average directional movement index. Then you're gonna go down to, you're gonna exit that, submit it. Indicator window, you're gonna add another indicator, and that's gonna be relative strength index, which is your RSI. Set that to period 5, just as you saw it on the computer. Same settings on the computer. See, average directional movement index, Bollinger Bands. So add that, exit out, go back in, Bollinger Bands. Go to moving averages. Very, very simple. Now, on your screen, only thing you're going to do is you're going to tap your screen, boom, click your screen. Do not try to click any other things. Click right here in the white spot, tap it, then you're going to go to settings. Chart settings, just copy the same settings. Alright, once you do that, see chart settings, same settings. You're going to click colors. Okay, click colors. Then you can copy my colors. Very important, how do you get a white background? Well, before you even start selecting these colors, write this down, jot it down, remember this. Before you even start selecting any colors, you want to get a white background. How do you do that? You go to scheme, and then you're going to scroll through this till you find the white background. So you're going to click it, go back to the charts. It's still black. All right, that's not the chart you need. Click it, find the white one. Once you find the white one, then you alter it. Once you find the white one, you alter it. So you click it, you're going to go back to your charts to see if the color is white in the background yet. If it's still black, you can go back here and find the white one. Once you find the white one, it's confirmed. You can start altering the colors, and you can now copy all these colors that you see here for a white background. And then pairs, these are the pairs that I do use. This is oil. I use Forex Broker Inc. This is gold. If you need to see your pairs on your computer and you're using it on your mobile, make sure that every pair has a dot after it on Forex Broker Inc. These are the spreads. And how do you see the spread on the phone? You got simple. It won't show it, but if you click advanced, it shows it. It lets you know the hours of how long the candle's open. So let's say you're trading on an hour chart, and you see that it's on 47. That means it's 47 minutes open on this candle still. And obviously it's getting ready to expire shortly. And then when it does, it does. On the top of the hour, when it hits 22, that lets you know the hour of that candle is closing. Or you can just look at your clock. It's 2:47, so you know when it hits 3, a new candle is about to open on the hour chart. Very, very simple. So these are the pairs that I do run. And that's basically it. And then everything else is, just runs. These are the videos that I promised I was going to work on. Please, when you're starting this section, if you want to figure out what support and resistance is, go to support and resistance. Go to trend lines to figure out how to do trend lines. Supply and demand with structure, how to do supply and demand with structure. Divergence with levels, kind of self-explanatory. And then FIP, GB, IML. That's the free video I did. I'm just going to throw that back in there to organize it and put all the old videos on the bottom. And then, of course, the video that I'm recording now, where I'm going to call it Tying It All Together. So that's all I really have to say about the market, how to really use this to full advantage. You will make a crap ton of money. Yes, it sounds simple. Might be confusing to most. But in reality of this, it's really, really easy. All right, so let me actually clear up this chart. Let me prove that one more time. All right, I don't know. I'm just going to pick a random place in the market just to let you know that the market is going to do this crap every single day. So I don't really care where in the market I'm going to pick. Let's just go here. All right, turn on your period separators. Boom. I want to figure out how this market is going to operate over here, and that's a nice drop. Once again, this is on gold, so you can't make this stuff up. Drag it from the low to this high, and as you can see, market did a nice clean double top right here. I didn't predict the market was going to go up. I didn't care if the market was going to go down. I just wanted to know how this happened over here. Well, here's your story. Double top, that goes off of the structure video. You can see at 38.2. Nice 38.2 formation. Reverse off of it, and the market did drop. Last leg spikes, right? Boom. Broke to 61.8, 78.6, 88.6. Yeah, so you could also see next extension when it went down to 127 and it broke that as well and went all the way down to 161.8. Alright. Now, the reason why this wick possibly even happened, even though it didn't really break anything and printed above it, the answer behind that situation was because this is called a stop plan. It went to go hit out the people that got in order that got it right. So let's say you entered here. And you want to protect your order. So you enter a stop loss here. You're up, you're up, you're up. Market comes back, takes your orders out. Now you're all mad and it does the whole entire move. And then you're like, wow, I just missed out on money. Well, you should have stayed alert. You shouldn't have just went to sleep thinking that set and forget when that worked, right? But in some cases, people, I do also recommend if you do want to just do it for the day and everything lining up with Fibonacci anyways, and you know it's in the downtrend and you're confirming it, you can put a stop loss up here above the double top, above the 38.2. So if it ever was to break 38.2, then yeah, you earned that to be stopped out because market did not do what your analysis says. Once again, I can't preach this enough. Trading is 90% mental, 10% technical. Do not blame the market for your loss. Blame yourself for doing your analysis wrong. Quote me on that. Write me up. Do not blame the market for what has happened for your condition of your loss. Blame yourself for not doing your technical analysis the correct way and understanding what I provided value inside of these videos. Because if you understand that I drew it from here to here to predict this, and then you understand that it failed to break the 38.2, and the next extension would have been the 61.8. After the candle closed and printed, the next extension would have been the 78.6. And after it did that, the next extension would have been 88.6, then 127, then 161.8. Then you would understand that this would have also been predicted if you understand how to use this the right way. Literally, just using Fibonacci, you can make just tons of money with everything that I provided value with in the videos of just using it within price action. Once again, whenever I mentioned the 50 being used in the middle part of the M's and the W's are the double bottoms and double tops, well, here's the double top formation or the W, what some people will call it. I can't make this stuff up. I backtested and I slaved over this to figure out how the market would do this every single day. Market went up, started out the double bottom, so you already knew it was double bottom formation, so the market price was going to go up. Look, the 50 is the middle. So once the market did go up to the 50 and it looked like it was going to pull back, well, you would have had an entry anyways because this looks like a divergent setup to begin with. And in this case, it wasn't. Market price is flat. And that's, I was just eyeballing it, I'm going to be honest with you. But even though price was flat, it was saying that it was oversold as hell. Tap, 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 and it wouldn't make any lower lows. And then when they confirmed to go up, that's where we could have concluded to possibly throw in ADX. This is why I use them in conjunction with each other. Because on ADX, it probably confirmed that the trade was to go up anyways. Right here, perfect example. Green line was above the 25 and the 20, right? So right here, you can drop it, see the 20. That's why I love using them together. If I don't have an answer in one, I have an answer in another. Black line was confirming as trending. Red line was super spaced out, meaning that there was no possible bearish trend. This confirmed that it was going to go up anyways, and it did go up. Okay? The fact that it went up, ADX confirmed it. So you can thank Quillen for that amazing ADX training that he did. So you clap it up for him. That's basically it. The 50 was used as the middle part of the W. And then obviously you see the market did shot up, broke 38.2. Next extension 61.8. Once it did off of 61.8, as you can see, it did a double bottom off of it and it shot up more. 78.6, then 88.6, right? That's all that it really is. You can also delete that and then figure out how that also possibly happened. By grabbing it for this high to trying into this low. And then you can see it better Double bottom off the 127, even better. 38.2 breaks it, 61.8, 78.6, 88.6 breaks that. Double bottoms off the 127, fails to go back in. Next extension 161.8, and as you can see, price did shoot up more to 261.8, and then it reversed off of that to go back in. Breaks 161.8, next extension would have been 127, right? Same story, different day. Rewind, play this video over and over. Ryan out, Forever in Profit, 2016, six-figure dreams, six-figure goals, seven-figure people. Just want to have a normal average life, or very extraordinary is up to you. Study this video, get pits, and stop the drama on Facebook. We don't care about that drama stuff. Just get it, and have a good day. God bless. It's Friday, and I had nothing else better to do. Yeah, I'm out.